Materials is plummeting, down 4.49% this week, with a deeply oversold RSI of 15. Amid a bearish trend, China's economic slowdown poses a significant risk. This is what every serious investor needs to know about materials right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we enter the week of March 23 to 27, 2026, the overall market context is characterized by elevated uncertainty, with the VIX index currently at 29.9, indicating a high level of investor anxiety. In this environment, the materials sector is particularly noteworthy, given its relative underperformance compared to the S&P 500 this week. The materials sector ETF, XLB, has declined by 4.49%, which may present a buying opportunity for investors looking to capitalize on potential rebounds. The materials sector deserves attention right now, given its significant role in the global economy, particularly in industries such as construction, manufacturing, and technology. As a key indicator of economic activity, the sector's performance can have significant implications for the broader market. This week, we will delve into the materials sector, exploring its trends, drivers, and potential risks, to provide investors with a comprehensive understanding of the sector's dynamics. Let us start with the technical picture and what the charts are telling us. The materials sector, as represented by the XLB ETF, has experienced a significant decline over the past month, with a weekly change of -4.49% and a monthly change of -11.29%. The current RSI reading of 15 indicates that the sector is deeply oversold, suggesting that momentum has shifted decidedly in favor of the bears. This implies that the sector is due for a potential bounce or consolidation, as the current reading is well below the typical threshold for oversold conditions. The trend direction remains downward, with conviction, as the sector continues to make lower lows and lower highs. Key support levels are likely to be tested in the near term, while resistance levels may provide a ceiling for any potential bounce. The current move does not appear to be a sustainable breakout, but rather an extended overreach to the downside, which may eventually lead to a corrective bounce. A technical setup worth watching this week is the potential for a mean reversion rally, which could provide a trading opportunity for those looking to capitalize on the oversold conditions. Now let us look at the fundamental catalysts driving this sector. The materials sector, comprised of mining, chemicals, steel, and construction materials, is poised to face a complex web of macro tailwinds and headwinds this week. General macro conditions, such as inflation, interest rates, and global growth, will continue to influence the sector, with elevated uncertainty, as reflected in a VIX of 29.9, likely to persist. Key stocks, including LAN, SHW, FCX, NAM, and APD, are signaling a mixed picture about sector health, with some indicators pointing to strengthening demand, while others suggest potential weaknesses in supply chains. Earnings reports from major players will be closely watched, as will regulatory news, particularly any updates on trade policies or environmental regulations. Macro data, such as GDP growth, industrial production, and commodity prices, will also be crucial in determining the sector's trajectory. The longer-term fundamental thesis for being positioned in the materials sector remains intact, driven by trends such as infrastructure spending, renewable energy adoption, and urbanization. These themes are expected to drive growth in the sector over the coming years, despite near-term volatility. As we navigate this complex landscape, it is essential to remember that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. The materials sector is facing significant risks this week, primarily driven by global economic uncertainty, trade tensions, and commodity price fluctuations. Investors should be cautious of supply chain disruptions, particularly in the metals and mining segment, as well as potential demand shocks from key consuming industries. Given the current volatility environment, with the VIX at 29.9, position sizing should be carefully considered to manage downside exposure. Unexpected headwinds, such as geopolitical events or unexpected changes in government policies, could also impact the sector. A disciplined framework for managing risk involves setting clear stop-loss levels, maintaining a diversified portfolio, and continuously monitoring market conditions. By doing so, investors can mitigate potential losses and capitalize on opportunities. And now for the strategic outlook, where does materials stand heading into next week? This week we maintain a cautious stance on the materials sector, given the ongoing volatility in commodities prices, we recommend investors tread carefully, monitoring key themes such as supply chain disruptions. A key thesis to track is the potential impact of infrastructure spending on materials demand. Please remember this is educational content and not financial advice. If you found this video valuable, consider liking, subscribing to Financial Market Oracle, and commenting your materials. Watchlist below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers. This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.